property damage that someone sustains due to your business operations. So the easiest scenario for that is if you have a storefront, if you have office space and you have clients or customers coming into your space and someone falls and they are injured, they can come after you for those injuries. That's where a general liability policy would protect you. For property damage, if you are a contractor, or let's say you're renting space from someone else and you put a hole in the wall or you damage the building, the general liability policy would cover you for property damage that you do to that building. This is where a lot of people first are introduced to insurance because they're going to go sign a lease for either office space, retail space. And a lot of times that landlord or property manager is going to request a general liability policy. And they're doing that just to protect themselves if you were to damage the building. So those are the two biggest things. That's the baseline for most companies, is that general liability policy. So a lot of times though, some people might not rent space. They might work from home. They might never have client interaction. They might not go out anywhere. That's where the second type of policy, professional liability, might come in. So not everyone needs general liability. You know, a lot of times, like I said, unless someone's requiring it of you, if you work from home and you do everything remotely, you do everything via email or Zoom, you might not have a need for general liability insurance. But if you're a consultant or you're giving professional advice, if you're an attorney, an accountant, a financial planner, an insurance agent, a marketing consultant, an engineer, architect, you're going to want to have what's called professional liability, because professional liability covers you for financial damages that you might cause a client. So again, the scenario I use for me, for an insurance agent, we have professional liability. It's also called E&O, errors and omissions. For those of you familiar with medical field, it could be malpractice insurance. So if someone comes to me and wants to buy auto insurance, they sign an application, they give me money, and I put that in my desk and I don't process it. And let's say 2 weeks go by and I forget to process it. And that person goes out and has an accident. There's financial impact to that individual. And it's my fault because in my professional capacity as an insurance agent, I didn't process what I was supposed to process. So my E&O, my errors and omissions insurance would pay for that. If you're a marketing consultant and you're handling social media for a client and you post something that's either inappropriate, not factually correct, and it causes financial impact to them, they could come after you for the financial loss. And if you don't have professional liability, then you're on the hook for that. So general liability is only for personal injury, property damage. Professional liability is for, excuse me, financial impact. Now, you might need both. You might only need one. More and more places are requiring general liability. I had someone recently, they were a consultant. They have a full-time job for someone else. They have an extensive background in manufacturing, and someone wanted to hire them to do Zoom trainings. There's really no liability exposure or risk, but this company was requiring them to get a general liability policy regardless. A lot of companies now, they basically take their marching orders from their legal department. So larger companies with a legal department say anyone that works for us or that we contract with has to have this type of insurance. We fight it sometimes. We'll be like, you don't have an exposure, but they pretty much, stand their ground. So this individual really didn't need general liability, but if they wanted to have that contract, we were able to find them a general liability policy that covered it. Venues now, it's becoming more and more popular. If you're doing a trade show, I had an individual who's a crafter. She makes wood signs. There's really not a lot of exposure or risk, but she wanted a table at a farmer's market. The farmer's market said the only way we're going to sign a contract with you to have a table at the farmer's market is to have a general liability policy. So more venues, more event spaces, they're basically looking to insulate themselves. So if someone comes to your table or your booth and they get hurt or they fall down or you do damage to the facility, they're just looking for that buffer where they're not on the hook for the cost. So you might get pulled into a situation where your business doesn't really need general liability, but in order to have a contract or work with someone else, they might require it. Both of those types of policies are going to be based, the premium, the cost of the policy is going to be based off the type of work that you do. The more risk the profession, the more exposure, the more expensive the policy is going to be. So for instance, the person who was a consultant doing Zoom calls for general liability was only $300 a year. But if you're a carpenter, someone who has a little more risk or exposure, you're looking at, low thousands a year. So it can run, from low hundreds into the thousands, depending on your risk. As you grow as a business, that's the other thing. It's usually based off your revenue or your sales. So when you're small, starting out, the premium might not be that high, but as your business grows, as the exposure grows, then your premiums would probably start to increase over the years as well. But it is, yep. Go ahead. Oh, do you have a question?
Can I ask? I realized we didn't really cover whether we could ask questions during or if you want.
Yeah, sure. I like free flowing. That way I'm not talking straight for 40 minutes. So please chime in.
Okay, cool. Well, this is so helpful already. It's just, VCET's an interesting case because we're a co-working space. So our people that work here typically don't need general, but do need professional because they're consultants and things like that. But one question I had around the general liability you're just talking about is I immediately thought of like car insurance, where if you're in an accident, your insurance goes up. Does the same thing tend to happen with general liability?
Not usually, unless you're a frequent claim filer. If you
People are
have
falling off ladders like every day.
Yeah. So a lot of times what we tend to see more than the premium going up is sometimes just a cancellation, so if you have a lot of claims, a company just might say, look, we really don't want to deal with this anymore. And then would have to go find another company to insure you. It's very, there are situations where the premium might go up, but it doesn't work like car insurance in the sense that, oh, you have a $3,000 accident, we're now going to raise your premium. With general liability, you might have an accident or a claim, your premiums might not go up. But if you have another claim, maybe in a year, they might say, we're just, you're injury prone, I'm sorry, and they'll move on from there.
Okay, that helps. Thank you.
Not a problem. So that's professional in general. That's going to be the foundation for most businesses, either both or one or the other. The other ones the next three, I'm just going to kind of gloss over a little bit. But again, if you have questions, please jump in. I'll be happy to answer them on the fly. Commercial auto insurance, not usually something most people have to worry about unless you are a tradesperson who's taking equipment to and from a job site, a courier type situation where you're bringing, whether it's medical supplies or documents or people. If your general business is just incidental use of your car, going to client appointments, for me, it's going out taking photos of a house or going to a networking event or something like that. I don't have to have a commercial auto policy, and most people don't. It's only for those types of trades or jobs where your vehicle is an essential part of the business. It's taking equipment from site A to site B, or employees or things along those lines. So for most people, it's not an issue. But again, if you think you're in the gray area, it's worth having a conversation. Number 4 is workers' comp. If you don't have employees, you never have to worry about this. But if you have employees, workers' compensation pays if your employees get hurt on the job. Basically, it's mandated by the state, it's regulated by the state, and it's an agreement between you and your employee that if they get hurt, you're going to pay for their wages while they're out, and they're basically not allowed to sue you. That's the benefit of having workers' comp as an employer. It can be pricey. For many companies, it's the most expensive piece of insurance they're going to have. So I always recommend people, I've had people before who are like, hey, I'm hiring someone. They get payroll set up. They've already hired the individual. Then they come to the insurance piece last, and they're floored by how much it's going to cost them. So I always encourage folks, if you're thinking about hiring someone, adding people to your staff, have a conversation with an insurance agent in the beginning so you know what the actual cost of that employee is going to be. Workers' comp is based on the type of job. The more at risk the profession, so obviously like a roofer, the more expensive workers' comp is going to be. The cheapest workers' comp is clerical. So if you sit at a computer and you're at a desk all day, workers' comp is usually not that expensive. But if you're out in the field, if you're working at high elevations, if you're working underground, any exposure that is high risk, you're going to pay a lot more than some people.
Travis,
and again, if you go ahead.
Sorry, do you pay per employee? So if you have workers' comp for one employee, but then you scale your team to 50, are there any discounts for like the entire company?
So workers' comp would be based off the total payroll. So they're not really concerned how many employees you have. They don't take down the employees' names. Like you don't need to give them a census sheet of all your employees' names. Basically, what they're going to do is say, my payroll is $80,000 a year. The only thing they're going to need to know is, do you have employees doing different things? So for instance, let's say you're an auto mechanic. You might have someone who works in the front who does just service write-ups or takes payment. Well, they're not going to be charged the same workers' comp rate as someone who's maybe under a car on a lift changing a tire. So if you have different employees doing different jobs, you're going to want to break that out. And that's where it's helpful to have a payroll provider who can do that for you and say, here are my 10 employees. These 3 did this, these 3 were this. And so they're going to base it off from the job classification and the payroll. Now, you won't get any discounts, but I can tell you the longer you've had workers' comp without a claim, you can get discounts on your rates. If you have a lot of claims or claim frequency, again, you're going to pay more because for some reason your employees can't stay safe. But I've had situations where people have had workers' comp for 5 years, never had a claim. And that's where it can get very competitive, shopping it around. And there's companies will be, if you have a good claims history, companies will be very aggressive to want to get you as a customer. So
I have an odd question. I feel like if I have an employee who is working for trade, so would they value the work? Is there like a rubric that they use to say, well, they're doing this job, so this is what that job would pay in the marketplace? So like, how then would you figure?
So they're basically looking at your whatever their W-2 says for income is what they're going to base that off.
Okay.
So there was an issue a couple of years ago where the Department of Labor really cracked down on 1099 individuals because a lot of companies were saying, hey, we're just going to 1099 everyone, and we're not going to have to pay unemployment tax. We're not going to have to get workers' comp. It's going to be, great. And the state was like, well, wait a second. This isn't how it's supposed to work. So what they did a means test and basically determined that if the individual is an essential part of your business, then they should be W-2'd. So for instance, let's say you're a painter and you have someone that comes in to paint for you. Well, you can't 1099 them because you're a painter. But if you're a painter who doesn't do electrical work and you have a job and you're like, hey, I need this, come on in, I'll pay you out of my proceeds from that job, you can give them a 1099 because you're a painting company, not that. So they're only going to base it off the W-2. They don't look at any other, if there's a side thing going on or however, they're just going to say, what's your payroll? Because at the end of the year, they audit you and they audit you off from your payroll number. So if you paid employee X $5,000, that's what they're going to base it off of.
Okay, thanks.
I also have a question, and you might have mentioned this and I just missed it. If you're a solo entrepreneur and let's say you're a painter, do you still need workers' comp for yourself?
No, you don't have to get workers' comp for yourself. So a couple scenarios. If you're an LLC, you can basically, you can exclude up to 5 members of an LLC. So let's say 3 family members decide to start a painting company and they're all members of the LLC. They can exclude each other from needing workers' comp. Workers' comp, in that situation, if you're a sole proprietor and you have no employees, I highly recommend getting disability insurance. The reason being, workers' comp only pays if you're injured on the job. So for your employee, if you have an employee and you have workers' comp insurance, they have to get hurt at work in order for it to kick in. If they're at home on the weekend and something happens, workers' comp doesn't cover that. But if you're the business owner and you have a disability policy, most disability policies are 24/7 coverage. So let's say you're someone who needs to work with your hands, and you're at home on the weekend and something happens and you fall and you break your arm and you can't work. That's where the disability policy would kick in. And disability policies are a whole heck of a lot cheaper than workers' comp. And when it comes to excluding, this is another thing to keep your workers' comp low. Some business owners don't exclude themselves, which I would highly recommend they do. But if you hire an employee, you just have to file paperwork with the state that says you're excluded from workers' comp, and they don't have to include your payroll in those calculations. Otherwise, they would include your payroll and include you in the coverage.
Which basically drives up your costs for no reason.
Yeah. I had an individual one time, they ran an LLC, they had a bunch of employees, they brought home, they declared their own income on their workers' comp, and it was like 100 and something thousand a year. And they were paying for workers' comp coverage they really didn't need to for an extended period of time. So I'd always recommend, as an owner, exclude yourself, because you can get better coverage through a disability policy and save your business money. And yeah, and like I said, it's only on the job. So there's a lot of workers' comp fraud because people do get hurt on the weekend. And they go into work on Monday and they're like, oh yeah. So yeah. So it is heavily investigated. Insurance companies will hire investigators to follow up. If someone files a big claim. So it's one of the most tricky pieces of insurance. And like I said, it is regulated by the state. Basically, the state sets the premiums based on the class code. So every job has a class code. It's a book like this thick. Any job you can think of under the sun has a code. And then the state then sets the price per 100 of payroll. So that's how they determine it. So that's why I say, there's some businesses out there, their employees are $20 or $30 per 100. So if you think you're bringing someone in at a rate, and then all of a sudden you're realizing, oh, now I need to pay $20 per every 100 of payroll, that really can mess up your accounting and what you thought you had. So that's why I encourage people to look at that in advance. The next piece is business personal property. And business personal property is pretty much anything you have in your business operations. If you have a store, counters, cash registers, an office, chairs, desks, filing cabinets, anything that you have in your business operations. A lot of times we can bundle, you don't have to get a separate policy for everything. If you have general liability, the term in the industry is called a business owner's policy, or a BOP for short. And a lot of times we can add coverages onto that policy. So you're not needing a separate policy for your business property and your liability. We can endorse those policies and add those coverages on. It's a blanket coverage, which means you don't have to go around your office and add up, tell us about every filing cabinet or desk or whiteboard that you have. Basically, you just say, I've got $20,000 in business personal property, and we put it as a blanket line item on the policy. The one thing we would want to do, if you have high valued pieces of equipment, we would want to what's called schedule those on the policy. Basically what that does is create its own line item. So if let's say you're in the medical field, you have equipment that's higher value, or you're a landscaper and you have tractors, lawnmowers, anything that's of high value. Most of the time they have a serial number on them, make and model. We want to account for those independently. So we take them out of that blanket coverage. We do it for a couple of reasons. One, we want to make sure we know what you have in case something happens. If your building burns down and you say you had, we had an x-ray machine in the office, we want to make sure we have that information so you can get properly reimbursed. But also the insurance company wants to make sure they're charging properly for that. They just don't want to say, yeah, we had a $50,000 x-ray machine and we don't have any proof or evidence of it. So if you have high valued items or specialty items towards your business that might not be common, again, for tradespeople, they're not going to include all of their tools. It's just like a blanket. But if they have a high-end piece of equipment they use in their trade, we would want to make sure we list that out as well, so we know that. But again, those things can be bundled in your general liability. And just like a home or auto policy, the business personal property does come with a deductible. In most situations, it's like a $500 deductible. So if your office was broken into or you had a fire, everything was destroyed, there's usually a deductible in place, but then you would get coverage for everything above and beyond that. So again, that's why it's always good if you do add high valued equipment or you have a huge inventory change to make sure that you update it in case something does happen. And then the other piece I wanted to talk about, so 1 and 2 are usually the foundation for everybody. 3 and 4, you might not need commercial auto or workers' comp. Business personal property, you can roll in with your general liability. But the other type of coverage that has become more and more popular, and especially it's more in the news now with events happening, is cyber liability insurance. Years ago, no one really cared about cyber liability. No one thought about it. But now our whole world is either on your laptop, it's in the cloud, it's virtual. It used to be only you'd hear about a data breach at Hannaford or TJ Maxx, a bunch of, they hacked into their database and stole credit card information. And so people used to think, oh, I'm not retail. I don't have that risk. I'm not swiping credit cards. But now it's everywhere. 3 instances in the last 2 years. Everyone knows UVM Medical Center issue, probably, that they were basically shut down for an extended period of time because there was a ransomware situation. They couldn't access files. The state of Vermont just had the issue with the 1099s for unemployment tax. And that's a situation where people were getting the wrong 1099. Personal information was on those forms. And now that has to, the state has to try to get that back and they have to resend. And then another one that wasn't so popular, but was still impactful for the business was Wendell's Furniture in Colchester about 2 years ago had their system hacked into, and basically they could not access anything. They didn't even know when they were supposed to make deliveries because someone hacked in their computer system and took control of it and they couldn't log in. They went in, turned the computers on, and they couldn't get anywhere. It got to the point with them where they were telling people, if you're expecting a delivery, call us because we have no idea. So it's becoming more and more of a concern because more and more people are at risk. If you have client information on a laptop and that laptop gets stolen and broken into, there's a cyber liability risk there. If you have, all it takes is an employee sending out the wrong information. No one really knows what happened at the state, but there's some theories that everyone was in an Excel spreadsheet. And as soon as you mess up line 1, everyone gets shifted down. So maybe, that happened, but it doesn't take much human error to create a situation where you're now sending personal information to the wrong person. Even if you have paper data in a filing cabinet and someone broke into your office and stole that, that's technically a data breach. That's personal information that's been taken. So in years past, cyber liability was its own standalone. More and more companies now are adding it onto the general liability as an endorsement option. It usually comes in $25,000 increments. I usually recommend everyone get at least the minimum if they can. If you're running an operation that has a lot more exposure, has a lot more data that's available that could get hacked into, I would recommend they can get policies up into the millions. But obviously get something's better than nothing. That's what I always say in insurance. I mean, as an insurance agent, we're always like, hey, you need these 25 things, but we know in actuality, financing it, especially as a startup, might not be ideal. So where can we get you some coverage? If you do have a cyber liability issue or a data breach, you are required to give credit monitoring to anyone that was impacted for a year. So that's just a cost. Now, if you only have 5 clients, you can probably handle that out of pocket. But if you have several hundred clients or customers, that cost could get, pretty high. But again, it can be anything. There's the last 2 sheets in the handout talk more about it. But if you get a virus that exposes private and sensitive information, if you had a customer sue you because private information was leaked. The other thing that a lot of people don't think about, if you have a PR problem, like if something comes out that your business was hacked and there's a data breach, there's a public relations issue. Having cyber liability insurance can help you pay to rebuild your name. Or there's situations where your computers get hacked and the data gets removed. It can pay to help you retrieve that data. You recreate it if you have to recreate it. And then also with the ransomware situations, there's coverage there where if you do get into a ransomware situation where they're requiring, the insurance company will work with you. And I think that's the biggest thing that people don't sometimes think about insurance is there is a legal component to having an insurance policy where if you get into a situation, the insurance company is going to pay to assist you legally in these situations. So it's not just you having to file a claim with, whichever company, it's you saying, hey, look, we have this data breach situation. My computers have been hacked, and filing a claim, and then the insurance company working side by side with you to make sure they can recoup these things. How do we make it right? What do we need to do to help your business? So it can be proactive. And I think a lot of times that kind of gets missed with insurance is everyone just thinks, I broke something, I got to file a claim. You could be in the middle of something. Something might not even have happened yet. It just could be a threat. It could be a litigation situation where someone's saying you did them wrong, and you need to file a claim and you need to have some defense. And that's what a commercial insurance policy will do for you. So I think I covered everything I was going to cover. Like I said, I talk fast with stuff. So please, questions about anything I didn't cover, anything. These are the 6 basic types of policies that a business would look at. There's other things that are one-offs, depending on your type of business, that are unique to each business. But I would say the biggest thing for anyone is to sit down with someone, have the conversation, and tell them everything about your business. And let the insurance agent know exactly what it is that you do. And that way, and that's it. There's some people out there who might just assume you need general liability and not professional. Now you know a little bit about what they are, have that conversation and bring up, is that an exposure? The other thing I'll say, it's not insurance, it's kind of insurance related, but indirectly. We just had a conversation today in the office about this. Also, don't put things on social media or your website that you don't do, because insurance companies notoriously are sleuths. I work with a lot of underwriters who will immediately, as soon as I submit something, they will Google you. They will Google your business. They'll Google your name, and they'll be like, hey, why is there a picture of this guy on a roof on his website? You didn't say he does roofing. And the problem is a lot of people use canned websites or canned photos. They're like, hey, I'm starting my business. I'm using this website and I'm using, this standard imaging, and it's not them. It's nowhere close to them. And so you have to go back to them like, you got to take those pictures down. I know it's not you. So just think that way when you're promoting your business or when you're setting up a website. If you don't do something, try to take either imagery of that down, or, just make sure that everything that is out there about you is representing you and your business, because insurance companies are notorious for coming back to us and saying, I saw this, I saw a guy up in a tree cutting down a limb, and I was just like, and you have to call. It's like, what are you doing? It's like, I know it looks cute on Facebook, but don't do it. So just think about those things when you're marketing yourself or promoting yourself in whatever fashion, because they do look.
That is so good to know. That would not have crossed my mind. I have a question, and folks, feel free to raise your hand or just jump in as I've been doing, or if you want to just put it in the chat, that's fine too. But I just wanted to kick us off with one that I had about commercial auto, and you sort of alluded to the fact that it kind of depends on the business, but like one thing that came to mind for me is like sole proprietors that make like an occasional delivery. Like they're not out delivering all day, but maybe once or twice a week they drop something off for a customer. Would that qualify as something that would need commercial auto?
If it's incidental, I wouldn't worry about it.
Okay, that's helpful.
I mean, if it's an incidental part of your business where you're dropping something off to a client or you have to pick something up, it's really not that big of a deal to use your personal auto policy for that. It just becomes an issue if it's something that, if your primary use of your vehicle is business related, then that's where you'd want to look at commercial auto.
I just had a question about the cyber liability insurance. When you referred to the $25,000 as like, that's the minimum tier, does that, like, if somebody were to sue you, that would cover $25,000 worth of what you would pay them, or what exactly? Or $25,000 the assets?
Yeah, so the policy limit would cover for, if it's defense costs, which 25,000 is probably not going to get you far. But if it's a situation where you need to pay for credit monitoring for a year for someone, or you need to try to recreate some lost data in a system, it will pay up to 25,000. And 25,000 is the kind of the incremental increase. So you go from 25, 50, then 100, 300, and then you get into the million range. So that would be what the policy would pay per occurrence.
Okay. And is it pretty standard that the more like customer data you have, the higher that should be? And as you scale, that should scale as well?
Yes, definitely. Okay. Yeah. Like I know I have a client who does website development and helps with marketing, and they have clients all over the country, but they store everything on their computer that sits at their house. So for them, they really like that million level and above is what they need, because not only is it's not just their data, it's their clients' data, and then their clients' employees, so there's different layers of, it's not just a customer, it's not just one customer, it's a company, and then everyone that works for that company. So there's a lot of data in there. So they have a huge exposure there.
Okay.
I'm interested in the yoga teaching world. I'm definitely hearing general for what you said, professional as well. And then also curious, I know some folks have the like very prepackaged things, and just curious your perspective on those types of things.
Yeah, I think anyone who's going into some health or wellness and fitness world, there's a lot, if you're part of an association, like I know physical therapists, for instance, I don't even know what the name of it is, but there's a physical therapist association, and they get their insurance through the association for a lot cheaper than if I went out and got it individually. So as a yoga teacher, if you're going to be part of a national organization, they probably will offer you some type of malpractice or professional liability coverage. And my recommendation is usually you're going to get that a lot cheaper through them directly. So I would start with professional. If they can bundle general into that, great. If not, if you just have one location that maybe people are coming to, your general liability piece for something like that isn't going to be terribly expensive. Your bigger expense is going to be the professional piece, just because if someone does, get hurt or something, because of your advice, that's where it's going to be. But the general liability is very inexpensive for most types of industries. But if you are part of an association, I always recommend starting there, just because they're usually the cheapest.
Thanks so much.
You're welcome.
Travis, I had another question just on what's the difference between contractor insurance and general liability?
So it's pretty much one and the same.
Okay.
So any contractor is going to have general liability insurance. And that's going to, the one thing that a contractor would have, or a manufacturer, is called completed operations coverage. So if you're a carpenter and you build a deck for someone and project's over, you leave, a week later, they're walking on the deck and it breaks. You have completed operations coverage included in that policy. So if you're manufacturing anything, building anything, and it breaks after the fact, then that's where that coverage would kick in. So
And
they're pretty much one and the same.
Okay. And would that be like an annual thing or per project?
Per project. So most insurances are what they call per occurrence. So if you have $1 million liability coverage, and that's another thing, basically that's the baseline for us, is we recommend everyone get $1 million. The price difference between $500,000 to $1 million is minimal. So always start with $1 million. But that's per occurrence. So if you have a situation in February and they paid out $400,000 and you had another claim in December, there's still $1 million there per occurrence. It's not, oh, now I only have 600,000 left. It's not a calendar year. It's not anything like that. It's per occurrence.
Okay. But on the side of getting the insurance, you get the insurance.
Oh, yes.
That
Annually.
side, you would get it annually and then it would pay out per occurrence.
Correct.
Got it. Okay.
Yep.
Awesome.
And the policy, most policies are a year policy, and it's a year from the time it starts. So it's not a calendar situation. So if you start a policy May 5th of 2021, it would renew May 5th of 2022.
Cinco de Mayo.
I have a question. This is more like, this is general interest. I find it very cool that cyber liability is becoming like just as standard as everything else. It obviously makes perfect sense, but obviously technology is moving super quickly. I think of like AI and facial recognition and all these issues that we're going to be facing in our everyday lives. And I was just curious, like if you could, look into a crystal ball, like how you think cyber insurance will continue to evolve over the next few years. Because I imagine there's going to be more and more that kind of needs to fit under that.
Yeah. I think it's really going to be industry specific. So if you're in an industry where you have that type of exposure, there's certain companies, like with everything, that specialize in certain types of products. So you can get an add-on for cyber liability to your general liability policy. But if you're someone who's more in the tech world, who has larger exposure, I would steer people to going to one of the larger cyber liability carriers who specialize in that type of industry. And so the add-on that you get with your general liability as a carpenter would cover you if your laptop gets stolen and all your client information was on there. Where you're going to want more robust coverage is if you are someone who's dealing more in that technology world. So to answer your question, for the average person in everyday business, I'm not sure how much, like if I'm a carpenter, I'm not sure how much AI and those things are going to impact my risk. But if I'm someone who's dealing in the tech world, and I'm dealing in a cyber industry, an online industry more, then I think the unfortunate thing with insurance is it's very reactionary. Insurance as a whole is not very proactive. I mean, we're still fighting about legalized marijuana and how to insure that. I mean, that's just, it's crazy that, we have farmers transitioning to hemp and other crops, and insurance companies are still like, we don't want anything to do with it, and we're going to be years down the road. And we have these conversations with companies every year. It's like, we got to be more progressive here. We got to move. They don't move. I mean, people have been driving Uber and Lyft for years, and insurance companies are still like, I don't know. We still don't know about that. And companies are finally getting comfortable with Airbnb. So insurance is very slow to the game. And the reason being, insurance at its core is numbers. It's actuarial. I need a lot of data and I need to analyze it, and then I can tell you. So until that data comes out, AI will probably, we'll have autonomous vehicles, and then 10 years later, the insurance industry will figure it out. Just because they need that data, because they don't they don't speculate. They base everything off facts, and they'll say these 100 carpenters in the state of Vermont, this is the data for the last 5 years, so here's the rate. They're not going to say, well, maybe, we're not sure. So it'll be slow, unfortunately. We're very old fashioned, unfortunately, in the insurance world.
That's really interesting though. That's funny to think about, that it sort of follows behind a little bit.
Yeah, I mean, I remember 5 years ago, I was sitting at Co-op Insurance in Middlebury, and we're having this conversation about hemp, and we're saying the dairy farmers and farmers with crops are going to transition to hemp crops. How are you going to ensure that? And they had no idea, and they still have not a lot of idea. So it takes time.
I'll ask another question. This is an area I know nothing about, so I'm really enjoying just learning. I'm curious, like, what is if you look at, all your clients for the last 5 years, like, what is the biggest mistake that you see? What's the thing that you're like, why are they still doing this?
Just trying to be cheap on things, I think, is the biggest thing. Like, again, cyber liability. No, I don't need it. And we're getting better at including it in the first proposal. So we as insurance agents are doing a better job of saying, you know what, we're not going to give you the option at first. We're not going to ask, do you want us to include it in the quote? We're including it in the quote. And then when we go line by line and they say, oh, okay, well, that's only X, whatever. As opposed to saying, because the biggest mistake we make over the years and we've evolved on is that first number's the number everyone really likes. So if we say it's $700, but if we add cyber, it's now $850. No, I'm going to go with the 700. So I think for us as agents, it's getting better at having people opt out as opposed to opting in to a coverage. But I think the biggest mistake that people make is trying to either cut corners, trying to save here or there, because at the end of the day, none of us feel we have that risk. I think we all think, we're fine. And for the vast majority of us, we're going to be fine. We might never file a claim. We might file a claim that's only a couple $1,000. But unfortunately, it's that one claim, that big one you potentially could get, that will knock you out. So I think it's just wanting the bare minimum. And then, like I said before, putting really bad stuff on social media that you don't do. I think it's a marketing. I think companies, I think the biggest mistake companies make isn't necessarily from an insurance standpoint. It's more from not knowing what their end game is or what they want, and then not knowing how to promote themselves that way. I think a lot of people, especially you find it in Vermont in the trades, everyone's like, well, I need to make a buck somehow. So I do this, I do this, I do this. And it's like, okay, well, if you focused on this piece and just marketed that and grew that, you would be better off. I think a lot of companies in the beginning just try to do a lot of everything. And in the insurance world, that really gets them in trouble, because it's like, oh, well, yeah, you do this, but this piece is nothing like the rest of it. So it throws everything out of whack.
Yeah. Other questions?
I just had a question about when you were talking about professional liability, with the example of like the farmer's market and then, hosting an event with a speaker. We do these lunch and learns pretty periodically, and it hadn't even crossed my mind that we could be at risk for promoting somebody and then them giving advice. Can you talk a little bit more about that and give me a little context for something that would apply to us?
Sure. I guess the safest way, I think about like financial advisors. If I could just come on and give a broad conversation about the financial markets, I think you're pretty safe. But if I was to sit down with you and give you specific information and tell you, this is what you should do. I mean, once you get into the advice piece, if you're talking in generalities about an industry or about a topic and not making it specific to an individual, you're usually fine. It becomes when you get into that world of, directing advice. And, if I came on and said, everyone should buy Bitcoin tomorrow, it's going through the roof, then you would get into the gray area of, okay, we brought someone in and they're telling our individuals this is what they should do. And then someone comes back to you and says, hey, I bought Bitcoin based on that individual's recommendation and I lost my shirt. And now I'm coming after you because you're the one that, introduced us. So I think if your speakers are just speaking in generality about whatever it is they're covering and not getting to your specific situation. Because that's what we always try to do. It's like, I want to talk in general and here's some guidance, but, and I think that's the caveat always, everyone should always just say, but your specific situation, talk to your insurance agent, talk to your financial advisor. So I think you would be in the clear as long as you don't have someone coming on saying, this is what everyone should do. This is my advice. So if it's a general topic, if it's a general conversation, I don't think you have a lot of risk or exposure that you should really be concerned about.
Exactly what I want.
And my assumption is some of your speak, like for me instance, I mean, if they're working in their own business or they're an employee of another business, they're probably covered in some capacity.
Yeah. Okay.
So Phoebe, like Dave and I are covered because we give people direct advice of what to do. So that's super important for us to have because we're throwing out specific suggestions all the time. So fingers crossed, no issues yet, but we do have the professional for that reason.
But I guess
Well, go ahead.
Oh, I'm sorry. I was just gonna say you can give the advice, but isn't it up to that person to actually take the advice? And I feel like if you were to lay something out online and that said, okay, it's really up to you to take this advice, whether you take it or not. It's kind of like a take it or leave it thing. That doesn't mean that wouldn't that then mitigate liability?
You can always find a loophole. And because we tell people all the time, it's like the best contract, someone will still find a reason to try to sue you over that contract. I think in the world of insurance, there's a little less risk as opposed to like if you were a financial advisor, if you were someone telling people what to do with their money, because there's not a lot of risk for me coming on saying, you should buy a professional liability policy and you buy one, you're out the premium, but at the end of the day, you still have something that is going to protect you. Whereas if you're someone that came in and said, I got this wonderful investment property you should buy, and you go down and buy it, and then you find out it's a big hole in the middle of Burlington, then. And one of the other things I was going to mention, it's not on the list, but we're talking about employees and just protecting yourself. There is a coverage called EPLI, E-P-L-I. It's Employee Practices Liability Insurance. This protects you if your employees do something wrong. Employee theft, employee misconduct. This is huge with sexual harassment. If you have employees and they're inappropriate on the job and another employee comes to you and says, I don't like the way so-and-so is talking in the office, and they file a suit or something, employee practices liability insurance would cover you for something along those lines. It's not something a lot of people talk about, but if you have employees, especially if there's a large office space or access to the general public, one of the cases we always use is a FedEx driver dropped something off at an office somewhere and made a rude comment. And this became a claim because the individual who was receiving the package heard the comment and FedEx had to pay out a suit there. So it's if you have employees and you're in an environment where there's commingling of the general public and your staff and you're worried about something like that, that is another layer of insurance to protect you. If also employee theft is again something that's not normally covered, but if you have large cash on hand and you're worried about an employee taking money, and again, more companies now are adding this layer of coverage to your general liability. So it's an add-on similar to the cyber, similar limits. but it would pay for defense if someone filed a lawsuit based on inappropriateness of an employee, and it would also pay for employee theft. So, but just other things to know as you start hiring employees, if you get to that point, bringing on more and more people, and there's more of a work environment, these are all types of things to think about.
Awesome. Anyone have a one last question for Travis before we wrap up?
Slight curve into nonprofit, so just stop me if it's too long, but being in Vermont, a lot of small nonprofits, directors and officers insurance, things like that, what might be a time to think about that for collection of neighborhood group who has formed a nonprofit?
Yeah, I would start that sooner than later. A lot of where we see a lot of directors and officers is in homeowners associations. So homeowners associations usually have directors and officers coverage. Depending on the type of business, type of nonprofit, what the scope of the services are. Sometimes you can get that added onto any insurance that you have, but a lot of companies will do a standalone directors and officers coverage. It's not. I always caution with saying it's not really expensive because it's all relative, I guess. But there's a nonprofit out in the islands that does water cleanup, and they have a board, and I think their coverage is like $1,100 for the year. And again, it depends on the scope of operations. But I would definitely, once you're starting to form that, have those conversations, because again, you might be able to add it on to the regular coverage, or you have to get a standalone policy.
All right. Travis, thank you so much. I was not prepared to have such an interesting conversation about insurance. I hope everyone else feels the same way. I'm glad we had a nice small group so we're able to ask questions and dig in. I am going to put your email in the chat just in case anyone has follow-up questions or wants to dig into their own sort of personal situations or anything like that. And again, Travis, just thank you so much for joining us today.
Welcome. Thanks everyone for your time. I hope you have a great day and good luck and success in whatever endeavors you're heading into.
And make sure you don't put anything weird on social media or on your websites.
Yeah, if it's not part of your business, don't do it.
Awesome. And then just another shout out to the SBDC. They bring us these events, and we're sponsoring today's. So thank you to the SBDC. Check them out if you want more help with your business. And thanks again, everyone, for coming. And like I said, this was recorded, so if you want to listen again or send to a friend, we'll have that available as well. Thanks again, Travis.
Thank you. Enjoy the sunshine.
Thanks, everyone.